Hello friends, a very warm welcome to my channel. In today's video, we are going to talk about Tata Motors. So very rarely we discuss such large cap stocks on our channel, but I was getting repeated requests to discuss about this company. Before we talk about the company more, let us remember and appreciate the contribution of the Tata Group to our country, and also remember Sir Ratan Tata for his valuable contributions, and he will always be an inspiration for the youth of our country. So we are going to analyze Tata Motors in this video. Before we begin, if you are new to the channel, please do subscribe and hit the bell icon to get updates of all the new videos that I upload. And if you are not a part of our Telegram channel, do join today by clicking the link in the description so that you join the correct Telegram channel. Every day morning before the market opens, I share my views on the market, and I also share a lot of strategies to help you improve your portfolio returns. So this will be a flow of our discussion. We'll discuss about Tata Motors business model in brief. Then we'll look at the stock performance in the last 3, 4, 5 years. We'll understand the main financial parameters, how the company has performed recently. We'll look at the reasons why the stock has given such a rally post-COVID. We'll understand what is the outlook of the management going forward from here onwards. We'll look at the valuations of the stock. We'll understand the risks of investing in this business and then form an overall view. So Tata Motors, as you all know, is an automobile manufacturer. It's a global player, one of the leading automobile manufacturers in India and also globally. In 2008, they acquired Jaguar and Land Rover from Ford Motors. This was a big milestone in the company's history, and it will be interesting to note that Tata Technologies, which got recently listed, is a subsidiary of Tata Motors. So this is the broad breakup of the business of Tata Motors. Tata Commercial Vehicles is one arm, then the second one is passenger vehicles. The third one is Jaguar Land Rover. So this is one of the main contributors to the business of Tata Motors, and the fourth, a small contribution comes from vehicle financing. Now, when you look at the segmental revenue breakup, roughly 70% of the revenue comes from Jaguar Land Rover, and the rest 30 from the Indian business. Out of this 30, roughly about 17% comes from the commercial vehicles, and 11 to 12% come from the passenger vehicles, and just about 1 to 2% come from the vehicle and financing and other businesses. Now, when you look at the stock performance in the last 5 to 10 years, it has been a cyclical chart. It is not a company where it delivers consistently good results over a longer period of time, and that's why there is a cyclicality element in the chart itself. Now, for investing in such kind of stocks, the entry and exit is very important. So you have to keenly watch how the company is performing in the short term or the medium term, and accordingly you have to decide your entry and exits in such companies. Although the broader trend remains positive over a longer period of time, let's say 10-20 years, but within that time frame there could be high amount of cyclicality which can change your returns drastically in such kind of companies. So as you can see, post COVID it has given a very massive rally and even crossed the levels of 1000 to 1200, and then due to the weak market sentiment as well as weak performance in first half of this year, the stock has fallen to the levels of somewhere around 780 rupees. If you look at the revenue trend post COVID, it has been a steadily rising revenue trend. They did about 2.5 lakh crores. They did about 2.5 lakh crores in FY21, which moved to almost 4.5 lakh crores in the trailing 12 months. But this increase doesn't show very impressive growth. If you see the last 5 years average CAGR revenue, it has grown at an average of about just 8%. Last 3 years have been slightly better to about 21%. 10 years is 7%. So this shows again the cyclicality element involved in the business. EBITDA has not been consistently rising. In FY21, the company did about 32,000 crores of EBITDA, which fell to 24,000 in the next year. And now it has gone up to almost 60,000 crores in the trailing 12 months. Margins have also not been steady. They did about 13% EBITDA in FY21, which fell to almost 9% for the next 2 years and then rose to 14%. So although the company is confident of maintaining this kind of margins going forward, we cannot rule out the fact that the EBITDA margins can be volatile in the future also. At a gross level, there is about 1 lakh crore of debt on the balance sheet. And just for the auto sector, if we see the net debt excluding the cash reserves and investments of the company, it is about 22,000 crores. It's a free cash flow generating company, generating healthy free cash flows every year. But at the same time, the company requires a lot of capex, which is done every year. And due to this capex, there is high depreciation charged to the P&L, and due to the loan, there is high interest cost debited to P&L, which ends up making the PAT negative for a few years. So you can observe that the EBITDA is positive, but the profit after tax is negative in the time frame of FY19 to 22, although the top line has grown quite well during this period. So at this scale of business, it becomes very important to see how efficiently the company is managing their working capital. Now, what led to the rally post-COVID? The company started delivering consistent sales growth, which it was not doing earlier. So that was a change in the growth of the company. And the company started focusing on electric vehicles. So it became one of the leading companies in the electric vehicles manufacturing in India. So this stock came into the limelight, and it began to capture the market in the EV space. Now, what is the growth outlook of the management going forward? The management expects that H2 can be better than H1. They are already seeing green shoots of recovery in the initial months of H2 is what they are saying. And when we talk about the last quarter, which is the quarter two, the management says that the performance was not that great because of the supply constraints. So they are not complaining of the demand constraints here. That is one point we should observe. In FY25, in the auto segment, the company is targeting a revenue of about 3,20,000 crores. Out of that, they had done about 1,46,000 crores in H1. So this itself shows that they are expecting H2 to be larger than H1. In terms of margins, they have done about 7.1% before tax margins in H1. And they are expecting a slight betterment in margin to about almost 8.5% in H2. So profits will be slightly better than the revenue growth. Globally, if you see, the China market has not done so well in their H1, and they are still continuing with their capex and spending about 5,000 crores in their EV manufacturing plant in UK. Commercial vehicles versus passenger vehicles, if you compare, the commercial vehicle segment has not done that great compared to passenger vehicles. Passenger vehicles was slightly lower, but commercial vehicles was much lower than passenger vehicles in the first half of this year. But the company continues to launch new products. They've launched almost 80 plus new variants in commercial vehicles in Q2 this year. When we talk about their EVs, they have registered more than 3,300 electric buses till date, and more than 6,400 Tata Aces have been sold this year. The company is also taking some digital initiatives like Fleet Edge, Mileage Saarthi, eDukaan. eDukaan is their portal where they sell their products online. Fleet Edge is a platform for the fleet owners to manage their entire business and track all the vehicles and their efficiencies. In passenger vehicles in the EV segment, the company continues to be the leader in India, and they expect their auto business to become net debt free in the second half of the year. This will also help in reduction of their interest costs, increasing their PAT margins. If you see the mix of the contribution of vehicles, you'll observe that the petrol share is slightly reducing. In fact, the diesel is also on a downtrend, but CNG is picking up quite well. It was earlier about 3%, which has gone up to almost 21% now. EV has also improved from 5% to 12%. But if you compare EV and CNG, CNG has done much better than EV also. When we talk about the valuations, which is a very interesting part of this analysis, earlier we used to compare PE ratio, but in this case I have chosen to compare EV by EBITDA for this company. So now how to calculate EV by EBITDA, you can Google it, you'll get to know. It's a very simple calculation. So we are focusing more on EBITDA figure here rather than PAT, because depreciation, interest costs, all those elements are highly volatile in nature for this company, and a lot of times the company ends up making losses at the PAT level. So in terms of EV EBITDA in the last 10 years, the median has been at somewhere around 5 times, and even now the stock is trading at somewhere around that range. So it is not that expensive. From a price to book perspective also, it is 2.85x, and market cap to sales is just about 0.6. So valuations per se are not very expensive for this stock. But in such kind of companies where there is cyclicality element involved, the market doesn't give very high valuations generally. Now, what could be the possible risks of investing in this company? It is very important for you to closely monitor the results and catch the trend of investing in this company. Closely monitor their auto sales numbers every month and see how things are improving or reducing. It's an international business getting a lot of revenue from abroad, so geopolitical issues would play a very important role. Government regulations, how much the government is giving subsidies for EVs, and a lot of other tax regulations will impact the business of this company. How well they are improving their technologies in electric vehicles and CNG hybrid vehicles will also play a key role. Their competitors are also in the same race, developing newer products, launching newer products. A lot of companies from abroad are coming to India as they know that the Indian market is huge. So that competition also creates a lot of risks. And from here on, when the company is as large as 3 lakh crore revenue, executing and growing from here is not going to be easy. That could be a risk for the company. So now that you've understood the business model of the company in brief, you've understood how the growth is expected in the coming future, how the company has performed in the last 5 years in terms of financials, the risks, the valuations, what is our view on the stock? If you're already holding the stock from a lower level, you can continue to hold because the management expects the second half of the year to be better, and the year after that also they are not having any complaints, although we'll get a much clearer view at the end of this year for FY26. So as the management is totally reliable in this case, if we go by their words, H2 is looking brighter than H1, so you can continue to hold the stock for another 6 months or so. But if you're looking at a fresh entry and you consider the valuations to be very reasonable, you can gradually build up a position in the stock and monitor the numbers every month. If you see an uptrend in the numbers as the management has guided, then you can gradually build a position. But do remember that whenever you see weakness in demand, whenever you see a downturn in this kind of a business, it is important for you to exit also. Otherwise, all the gains which you have accumulated for the last couple of years get washed away in a couple of months' time. So only when you can watch the results and monitor the company so closely, then only you should choose to invest in such companies. So that's about Tata Motors. I hope you like the crisp analysis. If you like it, hit the like button and subscribe to the channel. If you want us to make videos on your favorite stocks, do mention the names of the stocks in the comment section. Even this stock we have picked up from the comment section of the last video. Do join our Telegram channel by clicking the link in the description. It's a free channel. Thank you for watching and have a wonderful day.